Wow. So markets closed Friday, the 23rd. It was brutal and predictable, and it was indeed predicted to a T. So actually, although you would think I'd start with the SPY, I'm going to start with the DAX because that is where the crash started today, also predicted. So we had a bad close yesterday at 12,500 and whatever 50, which is below the 12,600. To be honest, we were breaking down triple bottom flush. Today we opened lower than the March lows, but more importantly, sorry, the July lows, the June and July lows, just totally took out the lows basically, and we closed below all three. So low close, I mean, guarantees continuation on the downside. We knew this, we said it, we even said it would happen before the US markets. This is the next low for the DAX. Europe is, I don't know who's screwed more. Everyone's screwed. 6% easily done next week. So that's the next support for the DAX, in my opinion. If we ignore the March Corona flush, it would be totally in line with this long-term strategic ascending line, but also this one here. So for me, this is pretty credible support on the way down. That's the DAX. Let's ignore it. The DAX was like a barometer for what to expect, at least for me, for the US markets. It's served its purpose. Now, goodbye. I mean, we'll go back to it later maybe, but this is where I think it will go. The European markets are still pretty significant because of the Ukrainian battlefield, and it's kind of the go-to area, maybe even before America when it comes to predicting market action, but the more significant market remains America. So thank you, DAX. It did what I thought it would do, and now we can move to the United States. The S&P did the same, so I thought we might have a small visit here and bounce. Didn't even do that. Went straight to jail. So we opened lower. We tested basically the low, the June lows, and we bounced off a little bit. Wow, you know, that doesn't mean anything. That's totally foreseeable. And we closed sort of between, you know, the first zone of support and the second. So, I mean, Monday expected to test the lows again, maybe even close near the lows or around about the lows, and then Tuesday go lower. I don't want to predict it that precisely. I'm on a bit of a roll, but I don't think I should be that precise, but that's what I think will happen. Do we bounce? If we do, again, it's a bit like these bounces over here, sideways for 2 or 3 days, maybe, you know, fill this gap and then chow back down to the lows, and then the real flush begins. Today was pretty catastrophic, but again, 1.5%, 2% down between all the indices. Nothing that unusual compared to what we've seen before. I mean, remember the CPI day? I think it was this one over here on the 29th of August. Was it that one where it was just a reality check? I remember everyone, it was very funny. Everyone really bullish here. You know, all these CNBC heads, really, a lot of them. Oh yeah, I bought stocks today. Yeah. You know, what the hell are you talking about? And then you never hear from them again, or they come on 3 days later and they don't even tell you what they did, but they're buying over here. It's kind of ridiculous how they get away with it and the great salaries they get. But anyway, so the point is, if we do have a bit of a bounce sideways, but get out of the way, we're going to triple flush. But this was the reality check moment here. This kind of guaranteed, to me, this was the guarantee, even though I thought we would go lower. Okay, we had a pit stop here. I sort of thought that might happen with this ascending line. I didn't think it would get this high. Straight away, another reality check, and down we go. So we might have a little bounce, but sell those bounces. Sell those bounces, because now, and as usual, when we're at the lows, everyone gets bearish. Just like when we get up at the highs, everyone gets bullish. So now you start to hear everyone finally list the reasons why they're bearish. Not that they were bearish a few days ago, but there's nothing bullish. You know, the only thing bullish about being down here is you might have a small bounce of 1 or 2 days, you know, 2 or 3%, but fundamentally, macroeconomically, monetarily, fiscally, geopolitically, what has changed? Nothing. It's just gotten worse. Interest rates have gone higher. The war has escalated. energy is worse, inflation is worse. Nothing is better. Maybe there's one or two small things that I can't think of right now, but it just, the other factors trump that. So to me, if you get a small bounce, sell it, sell something, sell 10%, sell 20. So yeah, I think that summarizes what I think is going to happen. A small move up maybe, but otherwise get out the way. And where do I think? I just started to draw these new lines and I thought I'll do it live. So next support, I'm still on the SPY. We take out this low and then where do we go? Well, why did I write here? First of all, round numbers are nice at this point. You don't want to get too detailed about where you think support is. 340, because it was actually the high before we flushed during the Corona drop. I mean, yeah, so that's my first level of support, but not strong support. Don't get me wrong, not strong support. It's just I don't see anything obvious between there and where we are. So once we take out 362, let's call it, nothing really. Yeah, 350, 360 won't do anything. 350, the slightest bounce, but I think 340 will do something. But otherwise, 320 or just above. I think this little area here will provide more support than any other. Otherwise, 300. And I remember hearing these calls from some very bearish people on Wall Street, and I thought it could happen, but now I can see how close we are to that level. So yeah, I'm quite surprised that I'm doing a video on this already. I mean, I thought this would happen. I mentioned it in almost every video, but it's just when you start making that video on where's the next level of support, it really hits home. But then again, it's only 6 or 10% move from where we are. And, we're only, I mean, what's the bear market? 20%. A recession is 2 negative quarters of GDP. We're in both territories. We're only just into a bear market. So yeah, of course, 30, 40%, no problem. And think about it. The March 2020 lows, we should at least be visiting that. How many stocks do you know are already at that level or even below it? Quite a lot. And these are not terrible companies. Some of them are pretty good. I've mentioned them, in the past. I've got some of them. I might show them later, but some decent names have already reached that level. So, but that's a hell of a move from where we are now. It's another 40% move. So a little 6 or 10% move from where we are, definitely possible. Not in 1 week, but and this is an orderly decline, down, up, A, B, C, D, all these waves, Elliott waves. So again, small bounce, maybe it could just open lower, but the point is don't buy, just sell the pops. That's my opinion, and that's what I will do. That's what I'll do. I will lighten up my positions even more, even though I was quite happy with me having a very light position and just buying back what I've sold and not really adding overall to my positions because I've got a lot of sidelines. But now when you see these kind of moves, you wish you even had less. But that's what the bounces are for. You've got to have a strategy. I didn't buy anything today. I'll go over what I'm looking at anyway later. That's the SPY. The Nasdaq, very similar, very, very similar. So tested pretty much its lows, opened kind of below. No, it didn't. It opened just above its, the prior support, but closed above it. Whatever, same thing. Absolutely same thing. Same percentage move. So for me, the SPY and the Nasdaq very similar. The Dow has been leading the way down. That is usually not the case. Interesting. The defensive sort of stocks are even more crippled. To me, that just states that there's overall weakness. Like, I mean, if you have the Nasdaq low, but then the Dow strong, you could say, it's not as weak as you might think. But when the Dow's down equally and overall more leading the way down, then there's something fundamentally weaker than otherwise might suppose. The Russell, I've been saying this, the Russell usually is weaker, and it hasn't been for a while. Now it's returning to regularly scheduled programming. You can see it's significantly down more. And, it was all the way up here whilst everything else was sort of almost testing its lows. Now it's completely caught up on the way down. if I can say that. So now it's totally got the same chart as the Nasdaq and the SPY, you could say. So Dow is still lower, but overall, all of them trash. All of them look weak. All of them are bounces to be sold, and all of them will go lower, in my opinion. I'm not going to do all the trend lines for all of them, but yeah, I think next support for Dow is where they're. I mean, you can see it's already at the March before the Corona flush happened, which is actually where I think the SPY will go, right? The SPY is 6% away from its equivalent. So yeah, that kind of proves it will go there. The next area support, I don't know, you could say gap fill, that's kind of guaranteed. After that, maybe the low down here. Let's call it 26,000. They like big numbers on the Dow Jones. So there, then there. I'll just leave that in for now. Russell kind of filled its gap already. It's at the flush lows, the high before the flush next, and it will start to really accelerate on the downside. I'd say 150, beautiful number. 10%, yeah, definitely. So now we're starting to see what it will look like, and that could go all the way down here. That might be when it all starts to turn. The Dow could hit. Wow, we'll see, we'll see. Let's just get there. This is still at least a week away. But yeah, you can see that I think the next direction is down, maybe a small 1 or 2 day sideways move. But again, like my other sideways day predictions, it's really just 1, 2 days and then boom, you're just totally thrown into the abyss. So not even worth a day trade, in my opinion. This is now time to zoom out, be strategic, go on holiday. I don't know, get a massage and really think about things. Don't deploy cash too early, too quickly, too close between your last buy. You got to really step back and think big picture. So very exciting stuff though, and it's great to see everyone just get it completely wrong. So now the VIX, another thing that I was looking for, it was 28. It was hard for it to close above 28, and I said 30 would be resistance, and the next one 32. Completely nailed that today on all three counts. So we took out 28, we closed at 30, and we visited 32 and came back down on this ascending support becoming resistance, and also coinciding with this. Just totally beautiful, no offense. So now the next thing is and the VIX is still underappreciated. So what do I think is going to happen next in the VIX? It'll stay strong. It'll get stronger. It's no longer time for people to think, oh, the VIX is overbought. I mean, what are you talking about? To me, it'll start testing this range again next week when the markets resume their flush, and I think it's going to close near 32. So the next thing that I think will happen in the VIX will be a close around 32, or maybe even a little higher. So a nice 8-10% move, a bit like today, closing high, and then we'll see. It depends what the SPY is doing, but if we start to break out of that, we could start straight away visiting high 30s, maybe even 40s, and that would mean the market is really falling down, and then I think something will break. Something will break. I don't know which continent it will happen in. It'll be some massive institution, some huge energy or insurance or bank or country just breaking. Interest rates will just take down empires. So something will break and VIX will really spike. That's what I think will happen. I'm not going to give a time on it. I'm not going to give a price on it. When it comes to predictions, you give either time or price. You don't give both. But I think I'm being pretty detailed about what I think is going to happen. I'm pretty transparent. So yeah, I think we're going to test low 30s. So up here, we'll close around there. And then we might even take it out and go to high 30s. Then let's see what's happening. But if we go higher than 40, something is up. So those are the markets in the VIX, including the DAX. Normally I cover there's so much to cover today, and I don't want to spend too long, but I think I'm going to have to. Interest rates. Again, yield curve inversion continuation. The short end is rising, the long end is rising slower, or in this case, actually went down. So totally more recession indicators flashing. We're in a recession. I mean, by definition, we're in a recession by all counts. Even through basic psychological polling, we're in a recession. You could even say a depression. I'm not going to wait 4 months later for some official report to signal that that's the case. It's done. We're in a recession. We're in a bear market, and this is probably the most leading indicator. So the 1 year, another new high close, now 4.11. It's just constantly going up. 4.2 on the 2 year, 4.2. That's higher than the 1 year. That's something special. The 2 year is more important than the 1 year. The 5 year basically hit and took out 4 close just below. Don't worry, next week it'll be above. The 10 year, okay, it's red, but I think what we're getting now is when there's real panic, people buy bonds, and especially the 10 year, people like that. So I think there was a bit of that, but you know, it's hardly down. And in fact, it was up a lot, basically went to 3.8. It'll keep going up. And there'll be more inversion between all of the, you know, the 1, 2, 5, 10, 30. So it's crazy. And you zoom out, you know, constantly taking out new highs, the 30, the 10, look at that. It's just higher highs. It's absolutely extraordinary. And then look at the British today. I mean, it's breaking. The system is completely breaking. Italian 10 year, ciao, a new absolute high. The Germans, same thing. Everything's the same. Okay, I'm on the weekly, but it's just to show you. And look at these break. I mean, look at these descending. This is from the 80s. This is before I was born. Totally taken out. Italian, I don't know. I mean, the Italians, when it comes to debt, forget it. It's just it's long overdue. The Japanese, I mean, look how many central banks intervened yesterday, and things did not go according to plan. The Japanese finally intervened to save the yen, first time in 24 years or something. Totally didn't do anything. Out of bullets. Just the yen. I mean, I should show the US dollar, Japanese yen currency, but let me just summarize. When it comes to yields, we're going up. And if now you see a bit of red, and this really doesn't even count, but that's because people are buying bonds. It's this vicious circle where, oh my God, stocks are going crazy down. What do I do? Let me buy bonds. Let me find safety in bonds, which by the way has not worked so far today since the crash. Remember, most investors, or what are they called? You know, these researchers or whatever, the people that you trust your money with, not that they bet the same way with their own money, but you know, they would do a 60-40% portfolio. They would 60% in stocks, 40% in bonds. Well, both of those have been destroyed. They're supposed to hedge each other, but certainly has not worked. Let's look at the TLT, for example. You know, this is like an average bond ETF that they would put your money in, just destroyed. You know, while stocks have been going down, this is supposed to go up. Well, you're down 40%. And I must admit, there's a bit of support that I've noticed here. So you might see a bit of buying in long-term bonds. I think it's a stupid bet. You know, you're guaranteed to lose money because inflation is definitely higher than what you're going to get after 10 years. And on top of that, you're losing because the price has been dropping. So you're getting destroyed in bonds. But there might be a bit of a bounce here, a little, I don't know, a little bit of a, you know, 10% bounce at most, but it's not worth it. You're losing with interest, with inflation, and it hasn't been working so far. And to be honest, the dollar is probably just better. So then you can deploy your money in something that will bounce really hard rather than guaranteeing a loss through bonds. So bonds constantly going up, but the yields constantly going up, but they've gone up so much that you might have a small bounce. But otherwise, the trend is the same. Markets down, yields up. And especially now, it's time to pay attention to other countries. The British, the Italians, the Germans, obviously the USA, Japanese, Japan might break first, actually. Let's look at currencies. Wow, the dollar is just absolutely sublime. Actually, first of all, the ruble. The ruble wins again. And I actually mentioned this in one of my last videos, maybe even the last video. I didn't think the ruble would fall below here. And to be honest, probably just go all the way up here and higher. The ruble wins, probably the best asset to hold since the crash. Beautiful. Yeah, not sure if you can easily buy it, but those holding it are very lucky. Not only are they in cash, but they're in cash that's been beating the dollar, and the dollar has been on a tear. So imagine being better than the dollar. Very, very lucky. But otherwise, the DXY versus all the currencies, just especially this week, storming higher. This ascending resistance. At one point, I thought, oh, we're a bit weak. Maybe we come back down here, maybe here. We touched the first support, and from there it was just the rest was history. We closed near the high 112, basically 113. I was wondering how long it might take to get to 120. Now, actually 118, then 120. That's two different zones of support. How close are we to 118? From 113, 4%. Easy. You could do that all next week. If the market crashes, if the VIX goes up, etc., etc. Maybe 2 weeks. I mean, then you're really overextended. Then, to be honest, then I would get out of all my dollars. I hold 50%, 50% of my portfolio in dollars. So I'm loving it. But I think even when it gets there, I might just say, okay, time to I would still probably like cash because I think we're weeks away, at least maybe months, probably months from the market just bottoming from a pivot. I think the Fed needs to really just cave into high unemployment, total recession, depression, political pressure. We can't just reverse course now. You've only just started. And maybe by the time they get, Fed funds rate all the way up to 4 or 5% or something, then they have enough ammunition. If they cut, they can actually turn the market a bit. Because if they did it too early with not enough interest rates to go down from, it's just not enough. Then it's the worst of all worlds. You cut rates. It's the only thing you can do, and the market keeps going down. Then it's like hyperinflation, and on top of that, well, high inflation. On top of that, the market's just you've lost control of everything. So anyway, I think the dollar will go higher. And if it does, to be honest, I'm going to look to get into another currency. I haven't even thought about which currency. I'm not going to do the Swiss franc. They only just got out of negative territory. I think they're at 0.5%. They were like one of the last central banks to get out of negative interest rates. Who the hell came up with that? I mean, that's ridiculous. The euro, I mean, fundamentally awful currency. I think it could go down. Wow, we've already made this move. It could go down to the 85 range. Why not? We'll probably stop off on the way. Maybe I'd buy euros, or I'd probably split it. The pound. Look how destroyed the pound was with the UK gilt yields going up. It's just the UK is really bad. I'm not sure what I would buy. The Japanese yen, the Japanese central bank intervened to try and take care of their currency for the first time in like 24 years. Lasted about 1 day. Maybe the Japanese yen would be a good buy. This could be a reversal candle. Let's see what happens. Yeah, maybe the Japanese yen, if the dollar sort of goes to 118 and only gets to about there, maybe I'd own the Japanese yen for a bit. I wish I could own the ruble, but I'd probably get arrested for that. So the Turks, why would this stop? This is unbelievable. I didn't see this. We close at the high, we're going to go higher because the Turkish central bank, Erdogan, just refuses to listen to monetary logic. He's just cutting rates. Got crazy inflation, and he just refuses to have central banks raise his central bankers raise interest rates. He keeps firing them. So in the end, he gets someone who's just going to cut rates for him to cut rates, and that's not going to work. And he refuses to admit that he's wrong. So that's just so stupid. He's hurting a lot of his own people. I think he'll survive the next election, even with some fraudulent elections. So I wouldn't hold the Turkish lira. Yeah, I'll think about maybe Canadians or Australians. I don't know. I haven't actually the FX. I'll look at it on Saturday. I might do a separate video on that. But everything's important now. Everything's important. The general markets, the VIX, the yields, the currencies, everything I cover, you just gotta have to pay attention. No more Netflix videos. You've got to start looking at this stuff. It's getting pretty serious. I'm gonna think pretty hard about what currency to swap. But I wouldn't change all my dollars in one go. I would do 25%, 25%, 25%, 25, which to me is quite a heavy tranche. Normally I do things in like 10% moves. I really machine gun my way in and out of trades, but I think I'm going to go a bit heavy on this, and I might spread it between several currencies like Japanese yen, euro. I'll probably still hold some dollars. I don't know. Actually, I need to think about it. Probably just gold. Anyway, that's what happened to the FX, to the currencies. Absolutely dramatic. The dollar, amazing. The ruble, the unsung hero so far of the year, just absolutely sublime. Maybe it's time to look at something else like the Uruguayan. I think the Uruguayans have 10% interest rate in their local banks, so I might have to look at more exotic currencies. Now I will move to commodities. Start with gold. Gold flushed down 1.6%, closed near its lows. Kind of expected. It already lost support. It went sideways, tried to reclaim its prior support, but basically failed. Typical technical patterns. We're basically going to drift lower to 1600/1580. And the circle's already there, so I'll leave it. I think I already covered that. But gold, how much is it down from the beginning of from the absolute peak? 20%. That's okay. There are some stocks that are down 20% today. So, and that's against the dollar, which has been an absolute tear. Just compare it to any other currency. I could do the Japanese yen and cheap, but let's just do the euro, for example, which has also been, well, everything's been destroyed. Yeah, you're down 12% from the absolute peak. And from April, when everything really came down, you're down less. You're probably down less than 10%. You know what I mean? That's nothing. So you could just hold gold throughout this whole move and not really care. Just go on holiday and then just live your life normally. So gold, very good. But then again, we're here to maximize profits and minimize losses. So if you can trade around this, I still think 1600, 1580. And by the way, long-term gold, the whole point of this mess is inflation is high. Well, gold is an inflation hedge, or it's supposed to be. So why is it going down? Well, because everyone thinks that the central banks are going to win in their fight against inflation, which they won't. They're not winning already. And even with yields going up, I say it's dramatic, but it's nowhere near as bad as inflation is. Inflation is moving up way more. If you want to start reducing inflation, you have to have interest rates higher than the inflation rate, which means you need interest rates above 8, 9, 10% for several months. And only then it will start to come down slowly. And we're slowly marching up towards 4, 5, 6, and that'll take months. So inflation, and I think we're going to turn, we will give up. The central banks will give up their fight against inflation before we even reach 5% interest rates, which means we didn't even once start to take on inflation. We didn't even once get to 8, 9, 10% match where inflation is. Because once you get there, you got to get above there and hold it for a while for it to come down. And then even when it comes down, when inflation comes down, you're going to have to stay there with interest rates higher than inflation for a while to make sure it really is subdued. So we're never going to get there. We're never going to tame inflation. And I think at a certain point when everything crashes, when the real black swan occurs, whether it's energy, the Japanese, I don't know what it's going to be that just starts dominoing worse than 2008, way worse. You have more debt, more liabilities, more geopolitical problems, worse energy self-sufficiency, the wars. It's just everything is worse. Yeah, by the time we get there, they're going to start to cut rates or slow down the rate of the interest rate increase. So inflation will stay high, they will lose, and it will persist and start to get worse at that point. So yeah, the markets will go up, but inflation will remain horrible throughout the period they're fighting it, and then get even worse when they give up. So gold should just be higher at that point than the all-time high. Maybe I didn't explain that so well, but anyway, gold should be long-term way past 2000. So the fact that it's down 10, 20%, 20% against the dollar, 10% against the euro, that's not that much, and it's a good opportunity long term. Silver, now silver got pretty destroyed today, which I said it should happen. If the markets go down, silver will go down all the way to 18 and maybe even below. To be honest, I predicted it completely on every asset I'm looking at. But today was a pretty bad day, but it had to happen. And it will go down to 18, where I will start buying the first buys I'll do in a while. And it will go even lower. But yeah, it's to be expected. Gold goes down and it'll go down to 1600, 1580. Silver will go down to 17. And I'm just using it as a buying opportunity for the reasons I just mentioned. I think long term metals go up because they are inflationary hedges when the market realizes the central banks are never going to get a hold on inflation. And before you want to position yourself before the Fed pivots. Now, I still think we're months away from a Fed pivot, but at some point the market is forward looking. So if let's say we're 5 months away from a Fed pivot, maybe the market is only 3 months away from it, and the day that there's the turn, it could be too late. So I'm playing the long game, but I'm trying to be very tactical on my entries to maximize profits. So silver, very weak. It's like the Russell. It's the weak one. It's more magnified on the way up and on the way down. I think we go to 18 first. I'll buy a little bit there, a little bit of the silver miners, which is even more risky because the miners go down even more. And then I'll wait for 17. So gold and silver down, everything down. Oil was down below 80. This is a sign of slowing growth. Also, the dollar going up. We've got a bit of a channel here too. Extend it. Yeah, where's the next support in oil? Maybe here, maybe 75-ish. And then let's see. But I mean, a lot of people are bullish long term. I'd look at it day by day, 75 maybe. But even where it is now, a bit of a bounce. Depends what the markets do. But oil down 5%. Impressive. Natural gas. Yeah, it did break its own little neckline here. It could come all the way down to 5.5-ish. And by then, yeah, even at 5, but then it's a fucking great buy. So natural gas is long term. Great fundamentals because the geopolitics also. Copper, wow. Yeah, this could come down. Copper is a bit like oil, but they call it Dr. Copper. It's the real barometer of the global economy. And to me, the global economy is just coming down. So we could see it come all the way down to 2.8-ish. Great buy long term. I mean, look at the move from the Corona move, from the Corona March 2020 lows. That's a monumental, and this is a real commodity. I mean, this is not some penny stock. 145% on the metal is very impressive in a short period of time. So yeah, I think copper does come lower with everything, with gold, with silver, and with even oil a bit, but even more. Copper magnifies the move. Platinum, palladium, I never cover them. Other great metals, just down even more, 5%-ish. Wheat, corn, everything, just commodities, agriculture's all down, energy down. Let's look at the precious metal miners. Let's start with GDX, the seniors. We totally flushed the lows. We opened basically at the prior lows of September. Down 6%, 6.5%. Both of them have the exact same charts. We were trying to double bottom, but when the market does what it just did, down we go. The big question is, where is next support? I've got it here, the circle. For the long term, January 2016 all the way to March lows, this to me is a very credible, strong support. We'll go down there. It'll probably take a couple of days at least because the market has to go down quite a lot. It is a bit of a move from here. And by the time we get there, let's say it's 4 or 5 days, well, then we'll probably coincide with several trend lines, not only this one here, and I think this one does count, also this sort of chop before the absolute low, and I'm going to call that 20, a nice round number. And also by the time we get there, this ascending support comes in. So I would say 20 slash just below. Remember, they like to take out the stops below round numbers. So, you know, you can get in a 1962 or whatever it will be at that time. You got to really zoom in on the 1 minute chart and find the candle over candle if you really want to be tactical about the best entry. But it wouldn't even matter at that point. You buy around 20, you get the best stocks. And by the best stocks, I mean the seniors that have great all-in cost. You know, they're making money even with gold at 1300, which we'll never get to. Get the good stocks. Don't go for the little boys who have too much debt and might not make it if prices stay low for 2 years, for example. You want to get sound companies that you can sleep peacefully to. So anyway, GDX is the seniors. So most of the stocks that make up the GDX, you know, they're sound companies. So yeah, I'm looking for, I didn't buy. I thought this would happen. I think there's more to go. I think if there's a bounce, I'll sell into it, but I won't be buying right now. Yeah, I'm just greedy. I want this down here. I remember on this drop here, I bought this drop in March 2020. I bought on the way down. And I remember my last buys was when the Fed announced it was going to do everything it can, you know, unlimited QE. I bought that day because I thought, wait a minute, what did they say? Doesn't that mean everything goes up, even though we have this virus and that means the world stops? I thought, yeah, but they're going to print to oblivion. That's what gold loves. And I bought, and I remember the market didn't react at first, then it did. And I really benefited from this move. I had great fun. I sold on the way up, but I always held enough to have good value. So for me, I would love to buy again because the conditions are even better, despite them raising rates. GDXJ, same sort of thing. I've got the ascending line. I might have to perfect it a bit, but where is it? I think again we're going to have a bit of, and you can see here we're already near these lows. I think we will have a bit of chop around this area, call it 26. Small support, but basically 24. So 24 to 26, bit of support, but really 22-ish. 22-ish. That's what I'm looking for. And by the way, if it does lose this support, the low will be the March 2020 low. So basically 20. And the GDX, 16.5 or whatever it is. Obviously, that will be the low. And the next one would be the absolute lows, which it can get to. Because I remember when this was happening, forget all of the picture to the right. I mean, you freak out. You're thinking, what the hell was, you know, I remember I was just looking at this area thinking, my God, it's just when the Fed spoke that I thought, okay, let's do it. So it's not obvious at the time. It's like now, you know, you're a bit of a deer in the headlights when the markets are crashing, and they've only begun crashing. Today we took out the lows basically, and not in all the markets. I think next week we will, and then people think, okay, now what do I do? Because we're at new lows and it's only just begun. You know, what about house? What about the real estate market? That hasn't even started to crash yet. Mortgage rates are above 6%. They're moving fast. There's always a delay there. What happens when the housing crash starts? Think about the bank stocks. They haven't even gone down that much yet. They need to get obliterated, and I hope they do, to be honest. So that's the miners. Normally, I would show the portfolio. That's just destruction in a good way, because I wanted to cover the banks actually after saying that. But yeah, this is what I kind of thought would happen. I took a bit of a hit today. It's the hit I always wanted to take because I have a lot of sidelines. The good news is that my heaviest holding by far is Newmont, and it was down and actually it closed better than this. It was down not that much. And my plan is to sell a lot of Newmont, and even though I like it, I don't want to, but before actually deploying cash, I would sell Newmont and use those proceeds to go into the more aggressive stocks for a bounce. Then when the bounce is done, I'd reverse it, sell the proceeds that I put into the silver aggressive stocks and put them back in Newmont. And you can gain like 5 or 10% on that, on good money. That's good. Because right now, for example, with all the little trades I've done here and there, which is typical of me, my account is way more here with GDX down there than when the account was all the way, I forgot where it was, but around here. So, that's like, I don't know, let's just call it 14, 15%. So, imagine having your account made up mostly of gold miners being worth more when the whole sector's down 15%. That's just very good trading. And that's the way I do it. And then when it turns, it gets phenomenal. So yeah, in and out, don't buy with too many. Make sure your buys are not too close together. Make sure they're not too heavy. Make sure they're not in crazy stocks. Avoid options, avoid leverage, definitely. And on the way down, being in defensive stocks that have already been destroyed. Great stuff. But anyway, let's see. I could still get crushed and surprised. But I do want to cover the bank stocks after what I just said, because they are getting destroyed. The whole market is. But watch out for, okay, Citigroup, for example. I mean, look at that. Never really came out of the 2008 crisis. Look where it was. You know what I mean? And this ascending support is weak, and look how close we're getting to 38. What happens if we lose 38? We go to 30, then we're basically testing the lows. HSBC, horrible stock, ascending, lost it a few days ago. Now we go to 25, 24. Then what? Credit Suisse, absolutely beautiful. I mean, go to the weekly, look at that. There's no bottom in sight. There's no bottom in sight. And they had rumors that they're going to leave the US market the other day. And then today the flush happens. Just destruction. I'm not going to go through the banks. They don't deserve our attention. But they're, and I remember, raising rates is good for banks. They make more on their loans. No, it's not good, because they're totally exposed to so many derivatives and junk loans. And oh my God, they deserve it. No, it's not good for them. And we haven't even seen the housing market crash yet. So wait till that happens. Maybe this is what the pivot will be influenced by. Maybe because, ultimately the Fed is owned by private banks. So once the masters start to cry, the owners, maybe that's when the pivot happens. I should normally stop my video now. I didn't really go through the individual miners. The chart is all kind of similar. Newmont, it's okay. Nico Eagle, basically they're all testing their lows. These are the seniors. Kind of acceptable day. Mag is still outperforming. Look at that nice hammer there on the ascending, really. And actually it was down quite a lot at some point. I think it was 7%. Yamana reached its $4 range. Goldfields keeps going down. The silver boys obviously weaker, as they're very aggressive. Keldarlen, great buying opportunity, has had news. Then we have the sort of very speculative ones that refuse to trade in a good way. This one that I bought recently held its lows. Trillium just doesn't trade, so not the worst thing. Fortitude, a bit of a strange, great 8% one, basically was green. Reina had very good news, but it just had to come down with the markets. And the rest, this is oil and gas, which I added a few days ago. And these are the alternatives I don't care about, because I own nothing really in them. Although my next sector to own is 3D printing. I really like that. So I'm using this crash to get into 3D printing, but I'm very, very light in these three. So when the market's about to turn, I'm going to go pretty heavy in these. But that's for a different video. I need to start making more videos covering other sectors. Banks I've done. This is 3D printing. I'll avoid that. The other metal companies, the coppers, the big boys, that barometers of the world economy, they're also coming down. Rio Tinto, BHP, Freeport McMoran, great dividends, amazing buys if you can get them down there and just hold forever with the dividends they give. Watch out with BHP here. It's just, I noticed that. Watch out for this sort of zone here, neckline flush. Uranium, which has just done so well recently. I remember up here people buying. Down we go. It'll come back down to 22 Aramco, the best uranium stock, and they'll all follow. Oil stocks destroyed because oil was destroyed and the market was destroyed. Biotech, I avoid those. They just thought I'd watch the main ones. Chinese stocks, forget it. And the large caps, nothing too crazy. The market was only down 1.5%, but the usual suspects got decked. Netflix, I thought this would come down if the market came down. Well, yeah, I'm not going to go through all of those again. But, not the worst day for the large caps. But there are some good ones out there, Alibaba. But, when the market comes down, they have to go down. So, and finally, crypto outperforming. I think during the weekend, this will get destroyed because everyone just will end up focusing their bearish attention somewhere. And crypto, I remember there were 1 or 2 weekends where it just got destroyed because the markets were crap during the week. And it's like a barometer of what's to come next week. And I think next week we get destroyed, maybe a little bounce, but I think they're going to destroy crypto during the weekend, actually. But again, it outperformed the last few days, I would say. I mean, look, yesterday was a green day, but you can't say the markets were green yesterday. So already, but once we lose this 18,000-ish zone straight to 17,500, and if we get to 17,500, we're only going to do one thing, and that's go below it. So I think crypto will crash during the weekend. I don't know by how much. It'll probably come back up to 17,500 just to see if the markets are going to have a bounce. And if the markets go down straight away, okay, down we go. And then we're talking crypto in the 12, 13,000 zones, I would say. So everything going down. But now is the time where you can really buy good quality things that can sort you in the future. So I'm going to make more videos during the weekend because this is just too exciting, too many things to talk about. This was just one large rant. So have a good weekend and good luck. And I will speak to you tomorrow, most likely. Thanks.